I mean, compliance with AAOIFI 59, and just quickly, just to give a briefing, it's at the back of HSA, which is the centralized body for Sharia in the UAE, imposing Sharia standards on Islamic banks in the UAE. It has its own implication on the banking side, but on the Sukuk side, this specific standard added few additional requirements. And why are we discussing this in Malaysia? Because UAE banks are an international investor, they are an international arranger, and they are an issuer. So it's impacting the global industry because of their active role in the industry. So this is why you have a panel in Malaysia discussing AAOIFI 59. Now that introduced few things. So whether changing some clauses on indemnity, for example, which has the possession of the assets, whether having a partial loss, something that is new there, other documentation Sharia. But the key, I would say, issue that arose is the tangibility. And the tangibility requirement, i.e. requiring the Sukuk having a specific percentage of tangible assets, is not a new requirement. So that requirement has been there, and I'm sure the Sharia side of things will say, okay, this is not new. What is really new is that requirement having a trigger, and that trigger being a credit trigger. So for us as a rating agency, introducing a put option, if you go below a certain threshold of assets or a dissolution event, created a new risk that was not before attached to this tangibility. If you have to pay your sukuk after 1 year or 2 years and it's a 5-year sukuk because you're not achieving this tangibility threshold, that means it translates to a liquidity risk on the issuer side, not on the sukuk itself. So the actual sukuk ratings, I mean, after a period of instabilization and lawyer innovation and discussions, the documentation of sukuk reached a stage where it is okay accommodating that from the documentation side and a sukuk side. The issue is it did not impact the rateability of sukuk. It did not impact the ranking of sukuk. At least I can discuss that maybe in another detail. But what it really raised is it could have an implication on the rating of the actual issuer. Yeah. And that's a new dynamic. So this resulted in few things. First of all, some issuers being unable to enter into the market because they don't have the right asset that they can put in place that would qualify to tangibility. You will have some issuers don't even have assets. So if you're talking about small corporates, they cannot enter into this venue. So it prevented a segment entering of the market because of the introduction of that requirement. And this is significant. However, this segment is not, if you look at the US dollar side of things, is not a significant part of that because the sovereigns, the big financial institutions, and the big corporates were able to accommodate this requirement. And this is why, after a period of dipping down, many, after fixing the documentation or innovating the documentation, the sukuk issuance picked up and it stabilized. That segment, it's definitely an important segment for inclusion, an important segment for widening the scope, but it did not represent a significant part of the international sukuk issuance. And on the local side, they don't need to comply with it because you're not actually targeting the UAE banking sector in your local issuance. So the actual impact on the sukuk market was limited in terms of volume, but I would say it's significant when you're looking at a credit perspective because it changed the dynamic of that risk and it changed the ability of new issuers, specifically from a specific caliber, to enter into the market. And I think these are important takeaways to look at. And I think the industry is still deliberating about this, and I'm sure we're going to be talking more about that.
Yeah.